Hello, everybody. We have a conference to look at in just a little bit. It's going to get started here with Robinhood at in about 4 minutes. They're going to be at the JP conference today. I don't know what they're going to talk about. This is one of those conferences that's like essentially technology, fintech, right? So like there's just going to be a bunch of discussions that are going to be happening here, but it'll be really cool to see what they have to say. I think the CFO is at this conference, so he'll be talking a lot about probably Robinhood's growth, their strategies, what they're trying to do, all that good stuff. Right now, the markets, we'll look at it for a second before we get into this conference, are really exciting at the moment. I mean, that's to say the least. 67,000 you got on Bitcoin. Robinhood fell below that $17 range. It was not able to hold 17, but still doing a pretty good job in terms of just maintaining itself. Bitcoin right here, 67,100. Hello, everybody saying hi. Katie, Toby, Ray, Kelly, hello. Thank you for being here. Welcome back, Amit, Jared. Thank you. Thank you for joining me today. So we got Bitcoin at 67,000. Snowflake still taking a nasty hit, 5% down. MicroStrategy up 16%. Celsius up another 5.6%. Nvidia 866. Insanity. SMCI up 26%. Insanity. And what's not insane is PayPal, of course, being down 1.63%. And I guess what's not insane is Tesla being down 7%, even though it feels insane. But we all kind of knew that Tesla, the run up to 250 was a little weird, or 200 was a little weird. It just happened out of nowhere. Tesla now at 187. I don't know why Tesla's down. Someone tweeted at me today that BYD has $16,000 EVs in Canada. And so maybe the competition's heating up, but I honestly don't know why it's down this much. If we look at Mag 7, Google and Apple are getting smacked today as well. Google 133, Apple 174. Meta's fine, Microsoft's fine, Amazon's fine, Nvidia's obviously fine, and then Tesla smacked. So Tesla, Apple, and Google are kind of being seen as the not part of the Magnificent Seven as much. A lot of CNBC analysts have been calling Microsoft, Meta, Amazon, Nvidia the fantastic four now. So we'll see how that turns out, but these guys are getting hit. And then on the miners, I know they're having a tough day, down 7%. Brokerages are doing all right. Robinhood up about 1%, Coinbase up 9%. I think people have to remember the miners' rewards get cut in half when the mining happens, right? Or sorry, when the halving happens. And so that's not necessarily the best for the miners, but the price of Bitcoin going up maintains their margin. It's not like that's bearish. It's just that they run up a lot, and until they fully prove that they're going to be able to monetize on that scale, maybe the street's going to be a little, iffy. They're still up a lot, right? So I know people want a lot more, but when you're up this much, it's hard to just keep asking for more. So that's what we got right now. But obviously, Bitcoin is the star of the show today. Bitcoin just doing phenomenal, 67,000 right here, just falling below 67,000. That's really encouraging for the street. All right, so let's get into this conference and see what these guys are talking about. Let me reload this real quick. All right, so it's connecting and it should be starting soon. Citizens JPM Technology Conference in California.
This presentation has not yet begun.
Robinhood is presenting there, and let's see what they have to say. March is traditionally a pullback month. Yeah, that's very possible. Very possible. The one thing that the stat we saw today is after February has had a higher than 5% month, historically 5 out of 6 times, the next month is actually higher. So February was very unusual. February is not supposed to be as good as it was. It was. So maybe March ends up being good as well, right? We will see how it goes. Okay, so it says connecting. Just gonna wait till that loads, and we should be good whenever that loads. It might take like a minute or two to get them started. Ian says, good evening, Amit. Hey, everyone. Good day for SHIB and Doge. LOL, didn't expect it. Very pleased. Yeah, Shiba Inu is skyrocketing, and so is Doge. Doge is up like 16% today. Doge is at what? Doge is 17 cents. Wow, it's up 12%. The thing was at 7 cents last week. So if Bitcoin's running, Doge is going to be running. All the altcoins are going to be running as well. And there's going to be a lot more movement. Given this is about Robinhood, there's going to be a lot of people buying it on Robinhood. And so it'll be interesting to see if these guys talk about what's going on in crypto and how this is kind of playing out at the end of the day.
This presentation has not yet begun. Please consult the schedule and press the play button.
It looks like we still have to wait for these guys. Oh, I think it's starting. There we go. All right, here we go. It's live, so we should be getting it soon. At least it turned into live now, so now it should be starting. Audio only this day and age. Yeah, it's, I don't know, dude. For some reason, it's always audio. We should have video though. All right.
Play button at the start time. After the presentation, an archive will be available here.
That's so weird. Hold on. Reload. See, this is what happens. Why don't they just use YouTube? Like, why are they doing this legacy software to just like show a conference? Like, it's not that serious, dude. It's not. Look, we have this little AI chatbot for technical support. Look at this shit. They have an AI chatbot for technical support on an audio webcast. Like, this is ridiculous. This isn't working. Let's see what the fucking AI chatbot says. Kush has joined the chat. Look at this. Kush, is this a website smoking Kush right now? Like, what's going on? Why is it not working? Kush has joined the chat. All right, Kush, where's the answer? What's the answer? Let me reload it from their website. Sorry, guys, it's JP Morgan old technology. It should be working. Let me see. Is anyone else streaming it on YouTube? Robinhood conference. No one is streaming it on YouTube. No one's doing that. What did Kush say? Did Kush respond? No, he's joined the chat. He's not responded. Dude, that's so weird. I saw it say live a second ago. So I'm going to go back to Robinhood IR, events, webcast. Yeah, dude, this isn't working on the other website either. This is not working on the other website either. We'll give it like 2 more minutes and see if it, ironic considering the topic. Yeah, it's annoying. We'll give it like a couple more minutes and see if it can.
Gold subscription.
There we go. We got
product, which is really encouraging. From a new product perspective, one that I'd highlight is we introduced retirement accounts last year and feel really good about 500,000 customers accounts at the end of.
Do you hear it? Do you guys hear it? Do you guys hear it? Please tell me you guys hear it. Damn it, did I exit out of the wrong one?
Progress.
Okay, here we go.
Expanding the offering and active traders have been a big, I think, rallying cry at the firm over the last at least year. So talk a little about some of the things you've been doing with active traders. Why is that an area of the market that you guys strategically want to go after, and what are some of the areas of success there?
Yeah, so as you mentioned, 3 priorities. The first being we want to be number 1 in overall active trading. Right now, we're number 1 in mobile, but we're number 2 overall behind Schwab and TD. And we're making progress. We've been zeroed in, as you had said, for over the last year in this area. Last year, double-digit gains in market share across equities, which were up 14%, options up 19%. So really good momentum as we focus in on this important category for us. And this year, we're continuing that focus. One big opportunity for us as we seek to be number 1 overall in active trading is delivering a pro trader experience on the desktop. So we hear from our customers, and we want to deliver on an experience on the desktop, wider screen real estate for our users to be able to trade the way they want to trade. And we think that there's a big opportunity there. The other area that we're really focused on for active traders is selection. The team's hard at work at delivering futures as well as index options later this year. So feel really good about the progress that we're making, but also the plans to keep that progress going.
Great. And wallet share, you touched on retirement accounts is one area, but love to just drill into what does it mean to expand wallet share with your existing customers and probably bring in new customers where you can be a more relevant relationship to them. And so how do you think about the wallet share that you have today? I don't know if there's any stats you can give around that. And then what are some of the types of things you're doing to expand that and the success you're having?
Yeah, on wallet share, there's 2 primary ways that we measure our progress there. The first is net deposits, and we've been zeroed in on that. again, 20+% net deposit growth rate for some time, 27% last year, and we're seeking to deliver another year of 20+% growth on net deposits. The other area of focus, which is super important, is Robinhood Gold. And the reason that's important is our Gold customers have over 8 times the assets of our average customers. They use more of our products, and they deposit at 1.5 to 2 times faster than our average customers. And so we've been making a lot of progress there. Robinhood Gold has added about 100,000 customers so far this quarter, and we're nearing an all-time high. So really, really good progress there. And while we have 23 million plus funded customer accounts, only about 6% attach rate, 6.1%. That's up from 5% a year ago. But we think from a wallet share perspective, as we increase the attach rate, we'll see the wallet share follow.
Great. And then I want to hit international. So I think we've been talking about international for years, and now we're actually international with Robinhood. So exciting developments really over the last couple quarters here. And so talk a little about what going international means for Robinhood, what you think your claim to success is, why people are going to want to use Robinhood internationally, and then we can talk about kind of the roadmap that you see playing out there and how that might compare to what you've been able to achieve in the US.
Yeah, so we're really excited to take kind of the mission of Robinhood and go global with that. And to start, we've launched brokerage in the UK, as well as crypto across the EU. And so far, nice early progress, tens of thousands of customers, most on crypto for the EU. We have a wait list still for the UK, and we've been rolling customers off. So far, what we're hearing, particularly on the brokerage offer in the UK, customers love the high interest yield that they're receiving on their uninvested cash. They really appreciate the over $2 million of FDIC insurance, no FX fees on trades. What we're hearing that they want more, though, is particularly the tax wrapper around the accounts for ISAs and SIPs, and the team's working hard on delivering that soon. Also excited about bringing crypto across the EU. We have over 25 coins available, and obviously, I think we all know that it seems to be a good timing with the strength of the market backdrop right now in crypto.
Yeah, great. And as you think about the broader international strategy, what does getting into the UK and EU crypto, is that leverageable into other jurisdictions? And how do you think about time frame of the ability to maybe even go broader internationally?
Yeah, at its core, Robinhood is a software platform, and I think we're really positioned well to move quickly. And the more we build and the more countries that we go into, that technology accrues to the benefit of the next launch that we'll set out to do. We do have ambitions to be all over the world. In terms of speed, I think we also have to be very mindful of every jurisdiction's regulatory environment. And so that'll probably be really what keeps us kind of on a careful and deliberate pace as we expand. But like the early progress that we have long ambitions, but it's a marathon that we're embarking upon.
Yeah, it's great. I know we're now through February. You guys haven't given February metrics yet, but any, I guess, high-level update on what you've been seeing in the environment and anything you can share with us around what you saw in February?
Sure. So on the call a couple of weeks ago, we highlighted strength and momentum in the business in January, and that's continued into February. So customer assets are up versus January. Net deposits over $3.5 billion. That brings the total for the quarter to date through February over $7 billion. So really strong net deposit growth. And trading has been up versus January across all asset classes, equities, options, and crypto. So the numbers will come out here in the next week or so.
Okay, that's great. I appreciate that. I want to pivot a little bit and talk about some of the things you've done on the expense side. So big theme, you mentioned it, profitable growth. And as a CFO, I can imagine there's kind of unlimited demands for resources, that there's so much, in terms of where people want to invest and grow internally, and you're trying to balance all of that. So how do you think about prioritizing projects, being able to fund all these different growth initiatives, the numerous areas of the product roadmap, while at the same time, this profitable growth mentality, which really has resonated in the market. You see it clearly in results in terms of what you guys have been able to accomplish.
Yeah. So first of all, we're really early, in the journey of the company, and when you look at it from a perspective of assets under management, we have about 100 billion of customer assets today, and that's relative to a market backdrop and competitors who measure in trillions. And so we're just getting started, and we think it's really important that we continue to aggressively invest for growth. Now, that doesn't mean that we have to do it. Everything that we do means more cost. When we look at our core business, we think kind of over the medium to long term, we can be running our core business expense growth in the low single digits. Actually, in 2024, we're planning to decrease our spending in our existing businesses, high single digits, perhaps as much as 10% down year over year, and we're redeploying that. We're increasing our marketing spend by about $100 million in our plan for 2024, and we're also pursuing several different areas of new growth opportunities, some of which I mentioned. And so, I think there is a lot of opportunity for us to continue to be more efficient, whether it's process optimization, whether it's geolocation of work. There's opportunity for us to continue to get more efficient on the cost side so that we can afford to drop some to the bottom for shareholders as well as pursue growth also for shareholders.
Yeah, it's been a great combination. You just touched on the marketing. You guys have had some really good success with some of these promotions in the market for different areas of your business model. Talk a little bit about, I guess, one, the success you've been having, and then two, how you measure the ROI. Because I think some people may look at, okay, marketing's going up. Is this still a good trade-off? And so how do you guys think about that trade-off?
Yeah, I think so first of all, what we're seeing so far, early results, we're looking at cohorts as they come in and evaluating the return. The marketing team is doing an excellent job zeroing in on high LTV customer accounts, and it's working, and it gave us a lot of confidence to increase our spending in 2024, and we'll continue to monitor that, but the primary measure that we're looking at is LTV relative to the CAC that we're deploying, and the early signals are quite strong. So we'll continue to watch this closely and lean in on areas that are working and pull back on areas that we're not as happy with.
Okay. Want to talk a little bit about the interest rate environment. So one nice driver of revenue growth in 2023 was the benefit of higher interest rates. But there's a lot of nuance that goes around that. So as we think about the Fed potentially pausing, and then even the extent we start to get rate cuts from here, what does that mean for Robinhood? How do you manage through that? And then what are the other kind of ancillary aspects of the business model? Obviously, transaction activity tends to do well when rates are moving lower. So how do you think about the balancing act of what lower rates could mean for Robinhood?
Yeah, with the diversified revenue model that we have, we did see some strength in interest income here over the last year plus as rates were going higher. But I really view rising rate environment as a headwind, not good just because it's increasing some interest income. When I think about an environment where the rate hikes are pausing and there's expectation for it coming down, there's probably 3 points that I would make. The first is, as we look ahead for the expected rate cuts this year, the average Fed rate in 24 is expected to be roughly in line with the average from 2023. So from a growth perspective, rates are a fairly neutral input for us in 2024. The second point I would make is over half of our interest earning assets are in customers' gold sweep deposits, where we have a fairly fixed spread, whether the rate's going up or down. And so a big piece of our overall interest sensitive assets aren't sensitive after all because of the fixed spread as we pass the majority of the economics onto customers. And then third is to the point that you were making, rates falling tend to be good for growth. It tends to increase balances, it tends to increase trading. And so I really view 2024 as a year where interest rates move from being a headwind for our business to being a tailwind.
Yeah. And you think about the cash building your customers, and you have a very strong value proposition. Is the expectation that a portion of that will just move into risk assets or effectively trading? Is that the point?
Yeah, I think when we look at our customers, they're investing, and depending on the rate environment, they might be investing in low or no risk FDIC insured, cash sweeps. But we also have other ways to invest, whether it's our retirement account or the taxable account. And when we look back to 2019, when it was a similar situation, cash had been building. Those assets had been deployed into investing. So we feel really good about the stickiness of the relationships that we're building with our customers.
Yeah. One positive point around the firm and talking to investors that people have really appreciated around the firm is the financial strength and how you guys have built this kind of war chest of cash and no debt, $5.3 billion in cash and equivalents and investments. Talk about what this financial strength means for you and how you think about whether it's deploying the cash or playing offense when maybe some others are playing defense right now.
Yeah, it's a great position to be in, particularly in this moment in time. Over $5 billion of corporate cash. Really three areas that are potentials for us. One is just investing in organic growth. We talked about increasing our spending and marketing in 2024, and that's an example of the flexibility the strong balance sheet gives you. The second is M&A, and we've done some M&A, smaller deals. One that we're excited about was the acquisition of X1, which is a small credit card business, and the team's working hard on rolling out a credit card opportunity for our customers that will be worthy of the Robinhood brand. And so really excited about that. The first will be something that we offer to our Gold members. And then lastly, returning capital to shareholders. And you saw us repurchase about 6% of our stock last year. And over time, we'll look at more opportunities to do that as well. In terms of the M&A environment, I think the backdrop is getting to be more constructive in terms of valuation expectations. And we'll be mindful and deliberate about the way that we approach this, looking for opportunities to add great teams, great technology, and perhaps accelerate our product roadmap. And that's really how we're thinking about it.
Yeah. Can you talk about Robinhood as an acquirer and the strength that you kind of bring to the table? Because imagine when you're looking at a company, you've got 23 million customers already in-house. And so that really differentiates in terms of your ability to partner with someone and potentially pay for an asset that another firm that doesn't have that advantage is not going to be as competitive. So how has that been in conversations thus far? And then does that open the door for you guys to maybe do more if more comes in?
Yeah, I think it's certainly appealing that Robinhood has such a high engaged, many millions engaged customers. If you look at the X1 acquisition, that certainly played into the calculus of how attractive it was for us to pursue that. But at the same time, we're not going to overpay because we see that there's synergy value. That's really something that we should be able to capture for our shareholders. And so we'll be careful there. But when we look at combining new assets into the Robinhood platform, certainly the strength of our customer base comes into play. For credit cards, the median credit score of our customers is about 720. 2/3 are prime or prime plus, and so that was one of the reasons why we were really excited about the opportunity in credit.
Yeah. If we zoom out a little bit, Jason, just want to talk about where you see the industry going. Where is the evolution towards, and what is making you most excited about where Robinhood sits within that?
Yeah, I still think, as I said earlier, we're just getting started. If you look at kind of the last 10 years, it was really about the emergence of retail traders, smaller balance retail traders. Robinhood played a key important accelerant role in that trend. I think as I look out over the next 10 years, not only is the continued trend in the US, but also international for us. But I think over the next 10 years, you see the retail trader really come into their own on the strength of increased earnings power, wealth transfer, and I think that Robinhood is incredibly well positioned to serve those customers as they continue to grow.
Terrific. I think that gets us pretty much to time here. But Jason, thank you so much for coming and doing this again. Always appreciate the conversation and look forward to the update.
Okay, that was it. Pretty good. Quick, nothing too crazy. Very quick stuff. I'll do a quick recap right here. And that's good. Very quick update from Robinhood. And I'll get you guys out of here, and then we'll do market close around 3:45. So really interesting stuff that he said. A couple things I want to break down, and then we'll be done here. So this was the CFO talking about basically what their February performance has been like and kind of the market sentiment that they feel. Big stat from them: February, $3.5 billion in deposits. We'll get the February metrics probably in a week or two, but 3.5 billion in deposits in February means that they are above 7 billion now in the quarter. Last quarter, Q4 2023, Robinhood did 4.6 billion in deposits. This quarter, they're at 7 billion, and it's only 2 months into it. So we still have the entire month of March left, which is going to be pretty interesting. So we got March left, 7 billion right now. That just goes to show that if deposits are up almost double from where they were in Q4, that means they're going to use a lot of that money, obviously, to be able to grow the business and do a variety of things when it comes to interest income. March, if that's close to 3 billion, you're looking at a $10 billion quarter for deposits. And so with a company that's worth, if you take out their cash, 8 billion, getting 10 billion in deposits, there's a lot they can do to grow on that. So that's one of the first things he said. He said they got 100K gold subscribers this quarter already. So that's reaching all-time highs for gold subscribers for the quarter. That's big. Then he talked about we want to improve trading. They talked about the desktop app, a bunch of different products they're working on. And they also said they want to, they said in February compared to January, trading is up versus equities, crypto, and options. So trading notional volumes for those three parts of the business are up in February, which is going to be good for their revenue going into this quarter. And we'll see, how March does. Now, one of the things the interviewer asked them about is the marketing in the context of what they're doing. Obviously, Robinhood has a 3% match on your IRA, 401k. You can roll over that and get 3% on that until April. And they did 1% on brokerages. They paid $11 million to get $1 billion in transfers. And what the CFO said is that right now, the marketing team is particularly looking at LTV, which is the lifetime value of a customer, in comparison to their customer acquisition cost, right? Their CAC. So if they're paying $30,000 to get this customer onto the platform, is that customer willing to spend $30,000 or more than that on the platform and ultimately have that money sitting on the platform so that Robinhood can do stuff with that money? Now, one of the things he mentioned in terms of their cohort analysis is that they're seeing, and we saw this in the Q4 deck, the customers they're bringing in, especially the customers that sign up for gold, on average are depositing way more money. They're investing more. And when they're putting in that much money into the platform, it's because they have the disposable income to be able to invest in the first place. So he's saying that the marketing team is particularly looking at LTV versus CAC on those gold subscribers and members. And the more they focus and hyper analyze the type of client they bring into the platform, the broader opportunity they have, obviously, for that platform or for that user to be monetized in an efficient way. On rates, so let's talk about that. So in the context of rates, one of the big bear cases for Robinhood is that when rates come down, the only reason people are joining the platform is because they're getting a 5% APY. If rates come down, there's not going to be that incentive to join, so you're not going to have something attractive to get people into the door. I think Robinhood has clearly articulated why this bear case is stupid, quite frankly, and the CFO kind of reiterated it today. So the first argument he says is that customer gold sweep deposits, where so cash sweep is a product Robinhood has that if I have $100,000 in Robinhood uninvested, Robinhood gets to take that money and they're giving me 5%. So they get to put it into a network of banks that are their partner banks. They get a commission, a fee for putting that money into those banks. The banks pay Robinhood for the $100,000. And then they also get to take the majority of the unit economics, i.e. the 5% APY, and pass it on to the end user. So I believe Robinhood, I'm going to pull up the picture because I tweeted it over the weekend. I think they made like 57 million or something off that last quarter. The majority of the money goes back to the user, but Robinhood still gets a decent chunk of cash for being able to invest that money or to give that money to those partner banks for the end consumer. Which means if that's the case, yeah, they made 37 million on their cash sweep, which is up 2 million from last quarter. And a year ago, it was 12 million. So that's basically 3x. They made 70 million on their interest on corporate cash. So the more cash they bring, the more they're able to invest in the cash sweep product, which means the point is interest rates are irrelevant there. There is a fixed spread. So let's say rates go down to 3%, which is not happening. There is a fixed spread between the amount the user is getting and the amount Robinhood is paying to be able to acquire that user, the amount Robinhood's getting from their partner bank. So if rates are 3% and now Robinhood can only give you a 2.5% APY instead of a 5% APY, the unit economics are just going to be that Robinhood makes less money from their partner banks on your cash and you get less money on your cash. But that doesn't mean that revenue collapses, because if they have more cash, the spread is going to be the same, even if the amount that you're getting on that cash is different. So it's not like rates go down, people aren't getting any type of APY, because we know for the next 2-3 years, rates are not going down to zero like they were in 2021. There's just going to be a different spread, but that spread is fixed, so it doesn't really matter. So the majority of the economics go onto the customer, which means the incentive for them to join is still vast, because look, if Robinhood's only giving you 2.5%, you think SoFi is going to give you more? You think JP Morgan's going to give you more? Chase, like all these guys are going to have to adjust their earnings, which means if you're already on the platform, you might as well just deposit more cash there. And Robinhood's probably going to give way more than what the other guys give. The second thing he made is that the second argument on rates is that, look, when rates come down, trading goes up. And this is the argument I think everyone has been talking about. When rates go down, trading goes up. And if trading goes up and deposits go up, that means there's more activity on the Robinhood platform. So right now they're making a crap ton of money off uninvested cash, which is how they're giving the APY and they're getting interest on that. But if you start investing, they will also make money because you're doing trading, you're doing options, payment for order flow starts to go up. You might be buying crypto, all that stuff. And so that's why it would be really good, even if rates go down. Obviously, if stocks go up, that's great for Robinhood as well. Robinhood, by the way, on the App Store, Coinbase, Robinhood is now number 12. Robinhood was like 22 last week. So it's jumped up 10 spots. People are back into the market. They're exciting. They're finding Robinhood. And Coinbase is number 9. Coinbase is officially in the top 10 in the App Store. So obviously people are getting excited about crypto, and that's why Coinbase is going higher. Now, on the $5.3 billion they have in cash, he said there's 3 things that they're looking to do. Number 1, they're investing in marketing. They're seeing that their marketing is effective, and they're going to keep investing in marketing organic growth. Number 2, that X1 card that they're going to be introducing. I did a lot of due diligence on that on Twitter. So if you haven't followed me on Twitter, make sure you go to Twitter. I published a whole essay about that over the weekend. And that X1 card is going to be something they unveil for gold members in a couple of weeks. So that's going to be important to drive growth. And then capital to shareholders. They said, look, we bought back $600 million of our stock. We basically took off 5% of the shares off the market, and that was really good for shareholders. And they're looking for other opportunities to continue doing that in the future. So in general, deposits are up, gold subscribers are up. Fed rates, they expect it to be neutral in 2024. It might come down 75 basis points, but even if it does, that's not really going to affect their go-to-market, their customer acquisition, or their lifetime value. And investing in marketing or organic growth, the X1 card coming out and trying to give more capital to shareholders is really the priority for Robinhood. So there you go. That's what's happening. Hugin Moonin says, if you have stock lending turn on and cash sweep, you get even more. That's true. So their cash lending made $12 million in January. Their stock lending, that was really high a couple years ago in 2022. And the reason it was high is because if customers have more stock, they're willing to lend it out. And interest was down. Well, if rates come down, then lending is probably going to go up because people are going to have more stock to lend out, even if interest revenue comes down. And so it's probably going to balance itself out as well. So that's a really good point that Hugin is making as well, that if stock lending itself will go up when people have more stocks. Right now it's at 12 million. Before it used to be like, I think at 20 million, like 5 quarters ago. And that'll probably go up even if interest rates come down because people will have more stock to be able to lend out. So there you go. There you go. That is the conference on Robinhood. This was a pretty good conference. Pretty much said everything we thought they were going to say. And the big number is 3.5 billion in deposits. They might pull a 10 billion deposit quota, which is going to be very big for Robinhood as well. Right now, Bitcoin 66,340, Robinhood 1669, and we'll see where things play out. But that's what we got right now on Robinhood and Bitcoin. I'll see you guys 3:45 here for the market close. Let's see how this turns out. Bitcoin hit 67,640 and then dropped down to 66.3, still up 4% on the day. So a lot of momentum here in the context of Bitcoin. Thoughts on GitLab? I'll talk about that in the market close. Don't have too many thoughts on them. I don't know the product that well. I do know Google owns a lot of them. They're basically a GitHub competitor, and for DevOps, it's a very important platform. I think they're close to profitability. So we'll talk about them in the market close, but don't have any position in these guys. All right. Thank you, everybody. I'll see you guys 3:45 p.m. Bye-bye.